Hi there, Evan here at the Chronicle for Wednesday, December 18th, 2019, where that future starts today. First topic we're going to cover, Canadian CPI. In November, it hit a one-decade high on a year-over-year basis. Some of the highlights, gas prices that were down 6.9% year-over-year in October, were up 0.9% year-over-year for November, and food inflation, as we all expected, and Mike Martins has been all over by the way as well, rearing its ugly head again, up 6.2% year-over-year for beef prices. As a side note, I am very bullish on beef and cattle pricing going into 2020. There has been some new export markets that have opened up, particularly in Japan and Korea, and livestock feed being a byproduct of vegetable pricing. Farmers saw feed costs shoot up last year, and you combine that with beef at a wholesale level that's been depressed for a very long time. To put a long story short, it's no longer profitable for many farmers to produce any more cattle. So there you go. Higher costs, prices that have been depressed, and farmers starting to take matters into their own hands. So as far as beef and cattle pricing go, I'm very bullish going into 2020. Going back to the Canadian CPI, Capital Economics put out an interesting chart on this morning, and they overlaid firms' expectations for growth in selling prices versus Canadian CPI. And as you can see, especially at the end of that chart, they have diverged. Now look back on that chart for a second. Every time firms' expectations has diverged to the downside of what CPI is printed, now we all know CPI, it's a government stat, it understates inflation. I understand that. But just looking at it from this chart here, when firms' expectations diverge to the downside, CPI 6 months later tends to come down to it. Now I know inflation's a lot higher than what's reported. I understand that. The reason why I'm putting this out there, more on this in a second, is what bonds trade off of for inflation expectations. Which then brings me into my next point. Bond yields. The Canadian 5-year bond yield, as I've been reporting on here previously, bond yields have been going up since about Labor Day. That's continuing. The Canadian 5-year is now over 1.7% as of this morning. Now here's what happened. Towards the middle of this year, when it looked like on the surface inflation was still tame, and the US Federal Reserve was going to cut rates, traders piled into short and medium-term bond futures, and then yields came lower as the Federal Reserve went ahead and cut rates. Now it looks like, as far as rates go, they are on hold. I know they're still doing a massive amount of QE and injections in the repo market. I understand that. All aside, as far as rates go, until the next market correction, the US Federal Reserve is on hold. What traders were betting on, what specs were betting on, was that the Fed would still be cutting rates even now. So all those long positions have to unwind. So you have a combination of a central bank being on hold and rising inflation globally. Which means, and it looks like it's happening now, short to medium term bond yields are working their way higher. Now with me, in the longer run, I'm still bullish on bonds. But I did state a couple months ago, I still stand by that call. It's higher for yields before lower. So really, how would you play it? Wait for yields to rise, at least another 20 basis points. I'll come back to you then. All right? We'll leave that there. And our last story of the day, I'll put this up quick. I mentioned in my previous video yesterday about Genworth wanting to provide insured mortgages for over $1 million. Well, Ratespy put out this tweet yesterday that Canadian Guarantee wants to go ahead and get into that market also. As I mentioned in that video at the beginning, they just want to share the bailout money when this all falls. That's all I think it's behind it. And if you want my opinion on all this, watch yesterday's video. I'll leave it in the description. All there is to it, smash that like button, leave a comment down below, subscribe, follow both my Twitter accounts, and as always, my name is Evan, this is the Chronicle, where the future starts today.